Good morning, traders. It is Thursday, February the 24th. Going to run through a bunch of charts real quick here. Taking a look at the SP 500. This is the SPY daily chart. You can see here we've been bouncing up this 5-day moving average. Yesterday we had a big pop in price, and the equities market is pretty much it's holding flat as of this morning. Now overall, if we were to drop down quickly to a 30-minute chart and just look at the last couple sessions here, taking a look at this, we had that strong move a couple of days ago. We've been consolidating. Yesterday was a relatively flat consolidation day. Overall, though, taking a look here, if we just throw a Fibonacci extension on here, we've got this low, we've got more or less this high right across here, and we've got this tight bull flag, you could argue, that is forming with some pivot lows right around there. Now, if we crunch this chart down, it'll show us our upside target for the SPY ETF. So 213 is the next upside target. First area it's going to run into resistance is a fractal number, Fibonacci number, the 618% move from this low here. And of course, 100% measured move from this first rally is going to be up to the 213. So we could see that continue to move higher. Now, if we take a quick look at the Apple shares, I talked about the other day in the video how we had this measured move here for Apple, throwing the Fibonacci extension on there, how we were trading right at resistance, how it had been starting to stall out. So we had this low up to this high, and then we had this low over here. We brought this across to see our targets, and you can see how more or less the Apple shares went all the way up to this resistance level, started to stall out, and we saw that big pop. We saw a breakout of this level. Now, a lot of traders, excuse me, were expecting some resistance there, which it did. You could see it was slowing down. It was losing its upward momentum, and then it snapped and popped out of that range, having a big up day there yesterday. Really kind of, this looks as though it could be a little bit of a blow off top. It has had a very strong move here already, and I think we could easily start to see Apple start to show some much wider range candles here going forward. But I think we're going to start to see the market start to roll over. Now this looks like somewhat of an exhaustion pop where it pops up, and then eventually we'll probably see a pretty sharp big down bar in the volatility. So if we take a look at some defensive plays here, utilities usually act as a defensive play. Utilities have been pulling back. They came all the way down to the 150-day moving average, which has acted as support many times in the past. It's been trading under this 5-day moving average, which is this light blue line here. We had a nice strong close above it. It pulled back to it. It dipped below it there the previous session, and then we saw it have a strong rally back, and now we closed firmly above that little bit of a reversal candle. So it looks as though we're starting to get a shift in money going into this kind of risk-off kind of asset class. Now, the utilities are high dividend paying, they're solid companies, and usually we see dividends perform well when everybody starts to become a little bit nervous about the stock market having a correction. So this is something we may jump in and take a play in. There's a potential for it to go all the way up to the 47.50 area, which are around these moving averages, and really it could go all the way back up and continue to push to new highs just like it has been doing all year. Another play there again is the bond fund or the bonds. We've seen them trading all the way down under this 5-day moving average, and we started to see a big pop there in bonds also. Now overall, the bonds are starting to trade back down a little bit. Ideally, I'd like to see the equities market. I just showed you how the SP 500's got an upside target. If we could see another big 1 or 2 day pop in price, it would reach 100% target. Bonds would have this kind of washout low down to the 150 day, which we'll be looking to get long if that takes place. We'll get long the bonds here. And of course, we'll probably see the utilities firm up and continue to move higher. Bonds and utilities, they tend to move together for whenever there's a bit of fear creeping into the market. Now let's take a quick look at precious metals. Here's the gold chart. Gold continues to struggle and stays under that 5-day moving average. Overall, continues to grind lower and lower day after day. I do feel as though it is getting oversold. You've had a pretty steady sell-off here under the 5-day moving average. We really haven't had any relief kind of rally or bounce to kind of flush the market. I think it's getting close to having a pretty big up day. Also, if we take a look at silver, it's somewhat in the same boat. Silver's been a little more volatile, but it is starting to settle down into this high volume, these previous lows, this support zone. And of course, we draw a quick support line across here. You can see we are pretty much at those levels now for silver. Now, if we take a look at pressure, the gold miners, the GDX has been pulling back to the 50-day moving average. It has had that impulse wave I've talked about several times where we've had this big move to the upside. It's broken 1, 2 previous pivot highs. When you break 2, you can usually start to look for the shift in momentum. From this downward momentum, we could easily see this momentum shift to the upside. If we throw the Fibonacci extension on there, we've got this low to this high, and so far we've got a pullback to the 50-day moving average, and it gives us a target somewhere up here at the 26 area. Now, if we throw a Fibonacci retracement on there, just showing where it pulls back, the market tends to pull back to the 3.8 or the 50% mark or the 618. Typically, you want it to find support at the 3.8 or the 50%. Usually, when it pulls back to those levels and rallies, you have a much stronger move. If it goes all the way down to the 618, it shows there isn't as much strength in the market. There isn't as much upward momentum, and it's not the strongest signal. But overall, as long as it stays within this range, it is technically now getting into an area here where we should be seeing it find some support. And I'm keeping my eye on this sector. We may get long for a play that can move us all the way up to these previous highs and extend all the way up to this more significant previous high over here, which is also our upward Fibonacci extension target. Taking a look at natural gas trading flat today. We're not getting involved in natural gas. We'll just skip that. Taking a look at crude oil. Crude oil continues to struggle there. It's been kind of moving its way lower the last couple sessions, grinding down. It kind of hit this 50-day moving average and was pinched between this 20-day moving average, and now it's trading under the 5-day, the 50-day, and at this point under the 20-day. And we've got the 5-day moving trending down, which likely probably going to see it continue to act as resistance. We may look to get on an inverse ETF like the SCO, which is a short crude oil fund. If it will load, here we go. You can see here you could argue it's forming a little mini basing pattern right across here. It has come up. It's under the 50 and the 20 days, so it's going to act as resistance. Of course, we're coming into these previous highs over here. It's going to act as resistance also, but overall, we could easily see crude oil continue, this fund continue to move higher and make a new low and start to create a much more volatile bottoming formation for crude oil itself. Taking a quick look at emerging markets, the EEM, it continues to consolidate and trade sideways here. The overall trend is down. We're hoping we're going to see this big bear flag break to the downside, and we'll see another leg to new multi-year lows. There's a couple other sectors that are more or less country ETFs that are starting to look pretty interesting. If we take a look at the Canadian fund here, it's got a bottoming formation. It's got these surges, more or less 3 or 4 surges to a low, you could argue. A big sharp drop off, strong rebound, really sharp drop off, strong rebound. A poke to a new low, breaking this previous low over here. Had another bounce and broke to a new low, breaking this previous low. And now we've had a little bit of an impulse wave where we've seen price rally to the upside. You could argue here it has broken a pivot high there. There was another little pivot high over here, and now it's above the key moving averages. It's still flirting with the 50-day, but it did go above it for a few days, and it looks as though it's pulled back, and we could easily start to see this continue to move higher up to around the 150-day moving average, the 29.50 area going forward, and possibly even further. Now, if we take a look at this, if we just change the symbol here to go to do 100 divided by the symbol, kind of flips the chart upside down. Let's just take a look and zoom back in time here. Let me get rid of this volume by price. More or less, we're getting into some significant type of bottoming price action. And here we've got these strong 3 surges to a high, and we've got this strong support trend line, which has been broken. We've seen price break down, and now it's bounced up to the 20-day moving average. So this looks as though it's breaking a significant level, just like what we've seen on previous ones. You can argue where the where you could draw those levels, but overall it's got this type of topping phase where you get this extreme volatility, and it looks as though we could easily see this pull all the way back and possibly go much deeper. And of course, this is the Canadian equities market flipped upside down. So if this falls here, then it's actually the equities market going up. So let me just flip back to the regular, the EWC. Overall, looks as though we've had the impulse wave. It looks like we could start to see this come up and go all the way up to the 29.50 area somewhere over here, and potentially all the way back up to the 31. So there's quite a bit of room for this index to continue to move higher. It looks as though it's got its first sign that it has pulled back to a support zone, and the momentum here has started to shift to the upside. Another one that I like and that a member pointed out is the RSX. I have been watching this for a while. Let me just zoom way back on the RSX. This is the Russian ETF. And of course, we've got multiple levels here where we see very similar patterns form. More or less, it's a bottoming formation. You see price go very sharp, and you have these extremely sharp sell-off. Let me just zoom in a little bit just to keep the chart more a little visual. Looking here, you can see you get these really sharp sell-offs. Big drop, bounce, big drop, and then you see an impulse wave where it starts to break a couple previous pivot highs with a run higher, and then you start to see it consolidate, chop around, and then you start to see a breakout to the upside and a pause and continue to go higher. And I think that's very similar to where we're at now. We've had a massive sell-off. Nobody really wanted to touch Russia shares. It's been really volatile, chopping around here. We've had that impulse wave really breaking out of this little stage one basing pattern, breaking two previous pivot highs. It has had this bottom kind of shakeout pattern forming, and now we had a big move down there yesterday. It's coming down to the 20-day moving average, and I think we could see this continue to move higher. Maybe not significant as into a big massive bull market, but we could easily see the second half of this move continue to come all the way up to the 20 or 21 area going forward. So those are a couple of things I'm keeping my eye on and starting to like. Now, another one was the UUP. UUP, strong bull market for the US dollar. Let's just zoom in here. Here we've got that consolidation pattern with the US dollar trading and tightening in this area here. All the moving averages are more or less trending up. Break down, I think, will be more significant. I think we could see a much larger unwinding if it breaks to the downside. The upside, I think, if we get a pop, could be something tough to trade, where we see something like this, where it kind of pops up and fades back down, and it'll be a little tougher to trade. It'll probably run some pivot lows. Overall, though, very tight pattern. US dollar has been on fire, and this is a consolidation pattern. And if we look at the UUP, let me just pull up the volume for it and just zoom in. You can see, let me get a little more volume here so you can see the pattern. Overall, we have seen strong volume rising as price has been rising, and since it's been consolidating, going sideways here, volume, the majority of the volume, the average volume here has been slowly declining. Now, obviously, there's some bigger spikes, but the overall steady flow of volume has kind of been declining, and really not a whole lot of distribution going on. It looks as though we could easily see this continue to go higher. So those are the things I'm kind of looking at going forward, and I think soon here, or maybe even today, we might dabble and get long a fund or two. Anyways, that's it for now. Take care. Bye-bye.